PNC Financial is owned by a few value investors, including Chris Davis, who's a director at Berkshire Hathaway. We're analyzing the PNC Financial Services Group, stock ticker PNC, to see if its market price is a fair value. We're using the 10 Towers banking analysis to look at the most telling financial metrics before estimating an intrinsic value for PNC. Then we're giving a final rating to the business. There will be 2 key bonus metrics along the way that just might be the tipping points when analyzing PNC for your portfolio. Before we get into these valuable metrics, let's understand PNC stock performance. Right now, with the regional banking crisis, PNC trades for $118.78 per share. In the last year, their stock price is down 31%. Currently, PNC pays a 5.05% dividend yield, so total returns to shareholders, while still down, are slightly above this. In the last 5 years, PNC stock price is down 16.5% overall. In the last decade, however, PNC is compounding at 5% annually. Going back prior to the global financial crisis, in the last 18 years, PNC stock price is up 4.5% compounded annually. The company has quadrupled from their global financial crisis lows. Their average dividend yield throughout this time is in addition to these compounded returns in their stock price. PNC trades just $8 above their 52-week low. They've been cut by quite a lot from their 52-week high. Just under 2% of their shares are sold short. PNC is a large bank. They have a $47.5 billion market cap. But why should we be paying close attention to PNC? PNC Financial Services Group is a diversified company offering retail banking, corporate and institutional banking, asset management, and resident mortgage banking across the U.S. The company traces its roots all the way back to 1852 and is headquartered in Pittsburgh, Pennsylvania. Starting with tower number 1, we want their average PE in the last 5 years to be below 12.5 times. This would be in line with historical banking averages. PNC's price to earnings ratio has fluctuated pretty extremely over this time. They traded all the way at a high of 33 times earnings, and they had a low of just 7 times earnings, both during spring of 2020 and somewhat more recently. Right now, the company trades for 8 times earnings, which is on the low end of this range. However, over this time in the last 5 years, PNC trades for an average of 14.5 times earnings. This is above the historical averages for a bank, meaning this is an X on tower number 1. Tower number 2, we want their average return on equity in the last 5 years to be greater than 9%. PNC's return on equity has fluctuated over this time. It dropped to a low of just under 6% in 2020. Since then, it has risen. While their returns were at least acceptable in 2020, in reality, they weren't great. It is good that the company has rebounded from that, however. In the last 5 years, PNC is barely getting by on this tower. They earn 9.4% average returns on equity in a given year, meaning this is our first check of the day on tower number 2. Tower number 3, we're looking for revenue growth. We'll be including their last 12 months worth of numbers in our calculation here. During this time, PNC has grown their revenues by 34%, growing them from just under $16 billion in 2018 to a little over $21 billion today. We also get a glimpse at the hit the business took during 2020 and how they have rebounded from that since. This is another check on tower number 3. Tower number 4, we're looking for net income growth. In this time, PNC's grown their net incomes by 19%. They had strong net incomes in all 5 of these years. Their greatest earnings came in their year where they had the lowest revenues in 2020. This is another check on tower number 4. One other thing to take from this tower is that in an average year, PNC earns about $5.9 billion. Put that in the bank for now, but we'll be using that to value the business later on in our analysis. Tower number 5, we're looking for deposit growth. This has been one of the areas that has gotten banks into trouble in that they have all these extra deposits. At the same time that they had a limited set of attractive investment opportunities. We'll see if this has been the case or not for PNC. In the last 5 years, they've grown their deposits by 63%, including up until today. This is very large deposit growth, and this large deposit growth can come as a double-edged sword to a bank. We'll be looking at a key banking safety metric related to deposits in one of our bonus metrics. It was one of the ways you could have spotted the failures of First Republic or Silicon Valley Bank ahead of time. So you don't want to miss that when looking at PNC. This again is another check on tower number 5. Tower number 6, we're looking for decreasing shares outstanding. If a bank is well run, it eventually will need an outlet for its capital. As we don't want a bank to bloat up its balance sheet, PNC has principally paid dividends and bought back shares over this time to return capital to shareholders. In the last 5 years, they've reduced their share count by 13%. This is potentially great for long-term shareholders in the business. When a company buys back its shares by decreasing the number they have outstanding, they're increasing your ownership percentage in the business, which increases the percentage of the company's profits you're entitled to without you having to spend a dime. This is another check on tower number 6. So far through our first 6 towers, we've got 5 checks and only 1 X. Tower number 7 potentially helps us find out if PNC has a low-cost producer advantage. We want their interest on deposits as a percentage of total deposits to be decreasing in the last 5 years. With recent rate increases, this may or may not be the case. We'll still want to find out. In 2018, PNC paid 1.06% on deposits, due in large part to their high deposit growth and these increasing rates. That's actually shrank. Right now, they're paying exactly 1% on deposits. This is another check on tower number 7. Given the scale of this bank, it potentially signals that they have a low-cost producer advantage, especially relative to smaller banks. Tower number 8 is a key operating metric for a bank. We want their non-interest expenses as a percentage of total deposits to be decreasing in the last 5 years. This is a more conservative way of calculating a bank's efficiency ratio by looking at their deposits rather than their revenues. In this time, PNC has reduced their non-interest expenses from 3.8% of total deposits down to 3.05% of deposits today. This is another check on tower number 8. We've seen this increase in efficiency so far in the other larger banks we've looked at, but it hasn't happened across the board, so it's good to see this for PNC. Tower number 9 is a banking safety metric. We want their institutional deposits making up their deposit base to be as close to zero as possible and ideally decreasing. This is because it's easier for institutional deposits to flee a bank and it exposes the bank to more counterparty risk. In 2018, institutional deposits made up 3.8% of total deposits. PNC has slashed their institutional funding and they don't have institutional deposits today. This is another check on tower number 9. Before we get to our valuation of PNC, it's time for our first bonus. As our bonus, we're looking at PNC's dividend profile. Right now, PNC pays a big 5.05% dividend yield. That's above the average bank and well above the dividend yield from an S&P 500 ETF. However, people make mistakes all the time by blindly chasing dividends. As a bank, we want PNC to support their dividends using their earnings. That's been the case in all 5 of these years. PNC has grown their earnings throughout this time. They've also increased their dividend payouts per share, and they've maintained a reasonable dividend payout ratio throughout. One thing to note is their dividend payout ratio has increased. They pay out about 45% of their earnings today as dividends. It honestly depends if this is a good or bad sign for the business. It's still well under the 60% threshold we'd ideally be looking for. While this is a snapshot of their last 5 years of performance and it's no guarantee for the future, PNC's dividend looks good right now. The big tower of them all, tower number 10, we want PNC's market cap to be below their average 5-year net income multiplied by 10. If this is the case, this gives a reasonable starting point for a valuation of PNC. Right now, PNC has a $47.5 billion market cap. In the last 5 years, PNC has traded for as low as $34.5 billion and all the way as high as almost $96 billion. That's a huge fluctuation in just 5 years, especially for such a large company. We learned way back in metric number 4 that in the last 5 years, PNC earns about $5.9 billion in an average year. When that's multiplied by 10, that brings us to a $59 billion estimated fair value for PNC. That's $12 billion above PNC's current market cap. It is $5 billion below their average market cap in the last 5 years, however. That's something to be mindful of. It would be worth digging in here. This is a check on tower number 10. Just because this is the case doesn't mean you run out and go buy the business. This is not financial advice. You don't want to miss our next bonus, as it says a lot about the safety of PNC. This was one of the ways you could have spotted these recent bank failures ahead of time, as it points to a bloated balance sheet. As our bonus, we want PNC's 10-year median returns on equity to be greater than their 10-year CAGR on their earning assets and their deposits. PNC earns median returns on equity of 10.7% in the last decade. At the same time, they've grown their earning assets at a 6.9% CAGR. Their deposits have also grown at a 7.4% CAGR. It's looking good here for PNC that their earning assets are growing slower lower than their returns on equity, this is a check on our bonus. This was not the case for either Silicon Valley Bank or First Republic, and was a screaming red flag for both of these banks ahead of time. Also worth noting is even though PNC had a whirlwind during the global financial crisis, the company did maintain positive returns on equity throughout all of those years. While they took a very significant haircut, they performed better during that time than banks that had negative returns on equity, and they've increased their returns to a moderate and respectable number since. So far in our analysis, we've covered a lot of the quantitative by focusing on the numbers, but the qualitative is just as important for PNC. Starting with the qualitative points supporting a potential long thesis. Number one, in addition to acquisitions, PNC has organic expansion opportunities it's taking advantage of, which could lead to higher organic growth than peers over time. Number two, valuations are not demanding for the banking sector overall or for PNC specifically, leaving room for future outperformance. Number three, PNC's acquisition of BBVA seems likely to add value to the franchise and for its shareholders, and will make PNC one of the regional banks with the most scale. This could drive above market fee growth for the company. Then the qualitative aspects supporting a potential short thesis. Number one, PNC is expanding into newer markets and revenue synergies often don't play out as expected, increasing the chances for mistakes or disappointments along the way. Number two, it's hard to tell if and when deposit flights and funding risks will abate. Will it require regulatory action? Will more banks fail? Will profitability keep being eroded at banks? Number three, there are few positive catalysts for the banks. Funding costs are running higher, net interest income has likely peaked, higher regulatory scrutiny is likely, and a potential recession could be around the corner. PNC was also a bidder for both First Republic and for SVB deposits. They could be showcasing their relative position of strength over some of these other regional banks. There you have it for a balanced perspective of some of the qualitative aspects of PNC. Now it's time for a final rating of PNC. In analyzing PNC Financial Services, stock ticker PNC, the company fared very well on our analysis, checking 9 out of 10 towers. They were only off on historical valuation metrics. PNC has also supported a seemingly healthy and growing dividend, and it earns returns that are outpacing its asset growth, which is great to see for the company. It's worth reiterating this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. Combining the factors of our analysis, PNC looks like a very strong candidate for further research. The bank was showing some strong fundamentals. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment below what business you want me to look at next time. Thanks for learning about PNC with me, and have a great day.